Scott sent me some data, and we were having a hard time um, matching what's in the platform with the capital efficiency and the signal returns. And Scott's been working his brains out, like trying to get that to match. And like, I don't know why it's not matching. I really couldn't tell you why. But I was like, all right, listen, I can only go with what I can see on that day, right? I'm not going to go through and back test manually, each signal to see what the return would be. But the the outlier returns are so impactful, Joe. Unbelievably impactful. Let's see just how impactful they are. You good with that? You
All right,
wanna
let's
look
do
at
it.
some back testing? All right.
Yep.
I mean, this is the invitation only live stream. It is the invitation only live stream. All right, so here's what I came down to. This was Chris's theory that he was testing. And of course, there's lots of extra columns here, but I've hidden them. Mahesh doesn't want all this data out there, so this is all I can feel comfortable showing. When I went through and I did 140, let me show you this. Yeah, 140 different manual type-ins of what the so Scott went through here. This is great about working with Scott. Scott went through and he found all of the ones that would fit my entry plan A on that date. So I'm like, cool, that's what I need to know. Then I went through and I manually put in the outlier signal return on all those dates. Now, not all of them have positive return. And Joe, if they had a negative return, would you be trading that?
Nah.
Nah, sure, for sure not. No way. No need for that. So what Scott provided me today, which is different from last week, is this is T, so today signals and yesterday signals. Meaning if we didn't take it today, but it lit up today with like for example, let's say yesterday I got the sell signal, but for some reason we didn't take it yesterday. However, today has the buy signal yesterday. Today we could still take it. Is basically what we're saying here.
Okay.
So by doing that, they gave us more opportunities, right? And we can't take every trade, Joe. That would be impossible, right? Some of these days are 20, 30, 100 trades. Like that's just impossible. So, as you know, one of the things I like to do is rank and start with the highest back test and work my way down. And when I filter for the highest 3 back tests on a single day, now these, like I say, are coming directly out of the platform. So they would match exactly what you would pull on that date. So average of 1.2 with no filtering, which is already great. If we filter for just the highest back test, second and third, so the top 3 back tests on each trading day, which I have 140 pieces of data in here. Not 140 days, but 140 pieces of data.
Well, I
That
agree
gets
in
us
there.
down to 19. Hold on. That gets us down to 19 trades over, I don't know. This is, I don't know if it's all of 2025, but it's most of 2025. Gets us down to 19 trades with an average. This is bonkers. Like I was telling Joe earlier, this gets in the category, the area of this feels too good to be true. 6.62%. 6.62% expectancy
Wow.
for every win and every loss and every trade in this example in plan A. Yeah, that's exactly where my head is at too. It just feels too good to be true.
Yeah.
6.62%. Now, here's the fun part. We could actually go and do those trades right now, right? We can see what TTD did, right? Let's go look at TTD. Let's go look at TTD.
Now,
And
Chris, with an expectancy of 6, if I put in $1, I'm expecting to get my dollar back plus $6 more, correct?
no, that's a 6% return.
Okay.
So it would be for every trade that you put on, averaging 6% return, win, lose, or otherwise. And most of the time sitting in cash. Yeah. So that is this trade right here on TTD, I believe. I'd have to double check the entry date. Let's double check the entry date real quick. Hold tight. Double check my entry date real quick, Joe. TTD 7/2/25. That one. Actually, just not that long ago. All right, 7/2/25. That was this one, this signal, that buy signal. Had everything lined up for plan A. 7/2/25. Let's go to TTD. And running from 7/2/25 to July 18th, a what is this? 8.94% gain. Is that what I came up with? 9% gain. A little rounding here and there. So, Joe, if you had bought options on this, let's price out some options. Hold tight. This is gonna get in the realm of like Masters of the Universe money. That's where this is gonna get in the realm of. Hold on. Yeah, I feel like 19 trades is all you need. I'm good
Yeah,
for that.
exactly. That's what I'm thinking. It's
And
season
that's why
focus.
it's so hard to sit in cash and not F up.
Mhm.
19 trades over the course of 9 months.
Yeah.
Like, yeah, of course you want to do all kinds of stuff, but why?
Yeah, but if you're gonna double your account size by sitting on your hands until the trade comes to you, it's worth doing.
Right. Okay, so let's do a theoretical TTD. So now, of course, I can't necessarily go back and back test the options, but let's just get an idea. Let's say that I go for the let's say October, September. Let's say I went for the let's say I went for this one here. 82. I'd rather be over here. Is there something with more 65, more liquidity in the 80s?
So, Chris, for our new people, you're trying to get closer to today's date so that you're not paying extra value for extrinsic, right?
Yes, yeah. That's what I'm trying to do over here. This is too close at 11 days. I mean, you could do it, but it just feels really, really close. This at 65, you're going to be paying, well, maybe not. Hang on. What's 131 divided by 320? 40%. Yeah, that's too high. Okay, so let's say, for example, that I took the 149 over 590. Hold on. 149, 590. I could do it that one. Okay. Now I have a method to my madness over here. Mostly madness, but slight bit of method. Okay. So let's say that I took this option, the 73 delta, and I paid $5.90 for it. Okay. Let's just assume we did. So we took the option for 590. Okay. We can see that it went up from 73.58 to 80.21. So option price and then dollar change is this minus this. So that's $6.63. Now, we don't get all of that, Joe. We get approximately the delta, but it's never perfect. But let's say that we go with 73% of that. So with the delta means we get roughly this times this. Honestly, I would bet it's more, but let's just say we go with that. If we purchase the option for $5.90 and our option gained in value by $4.83, that means our option gained 82%. So rather than a $9 move, this divided by this, a 9% move, that'd be an 82% move.
I'll take it. I'll take it.
Dude, that's crazy talk.
Absolutely.
So I'm really excited about this. This is like I it feels so good that it feels too good to be true. And I'm looking for holes. Maybe Scott can help find some holes. 6% per trade, not per year. And keep in mind, we're trading options, which are leveraged. So a lot of their returns are like 10x the change in stock price. Yeah, exactly. There you go. 82% versus 9% for sure. So, and this is a great question too. Any chance of overfitting the data? So, this is one of the things that I want to really point out is that when we're going through these, that's the last thing I want to do. Like that is the very last thing that I want to do. I want to make this anti-fragile, not fragile. Um, and here's the thing, right? We could take all of the trades that are available on that particular day. Let's just do that real quick. So that if we took all the trades, which would be impossible to do in a single day, all of the trades, we'd have 91 basis points of expectancy. You can see it. They're not all winners, right? There's a few big winners, and there's a decent amount of losers here. But if we filter off just for positive historical returns, number filters greater than 0, and we're focusing in on just this one day. Hang on. I'm gonna have to unhide those columns again. Here's what I'm gonna do. I'm gonna unhide just the entry date. That's gonna make life easier. Okay. All right. So if we went only with these, with a positive signal return, that would be 3.7. 3.7. That's on anything with positive returns historically. Anything, right? Some of these are losers. In fact, more losers than winners. So 1, 2, 3 winners out of 8. So 5 of 8 losers. 5 divided by 8 is, I'm sorry, 3 divided by 8. 37.5% win rate. However, a 3.7 expectancy is giant.
Mhm.
And let's take that one step further. And this is what I was saying. You can't take every trade out there. I'm not going to trade. I may not take 8 trades in a single day. Even if I did, though, that'd be hella positive. But let's say I could only take 3 of them on that day. So we had ranked this down to 1, 2, 3. And on this date, 7-2, bro, just like crazy talk.
Absolutely. And 3 trades in a day is not a significant amount of work. It should be doable, not a problem.
Yes, exactly. Yeah. Only taking the top ranking trades. Exactly. Exactly. I mean, you
But
could add a fourth. You could add a fourth, the top 4 per day. So that'd be these 4.
yeah.
I mean, you're it's really really nuts. So
So
that
again,
would
for
get
our
you from January 27th to now an average of 4.8 expectancy.
newer members, where can they go find the outlier return within
Okay.
software?
Great question. So, over here in the platform, pick any stock you want. Go up to performance summary. You'll see that right there. You'll see that return right there.
Awesome.
87.85. That's that number I typed in right there. So, my thought for I know, Ashley. Yeah. My thought for plan B was if we figured out all these different reasons that plan A works, right? And it really is, it's if it's not all 9, it's 8 of the 9. I mean, it is pretty much where we were. However, with some additional criteria, like the like the donkey channels, uh, like the fear and greed heat maps all rising on that certain day. And yeah, of course, it gives you less days to trade, right? So there's 1, 2, 3, 4, 5, 6 potential days over the span of 2025. I'm telling you, Joe, if you guys can sit in cash and not F up and just follow the plan, just follow the plan, these returns are astronomical. These are our championship winning masters of the universe type numbers. Okay. And yeah, there's a lot of time where your portfolio is going to be sitting flat and you can put it in SGov, right? We're going to be touching a lot of grass with just 19 trades. Yeah. Actually, it's 25 trades. It's 25 trades if you include through ranking of 4 and 19 trades if you include ranking to 3. The expectancy between 3 and 4 is roughly the same. And like I say, that's just on 2025 data. Small sample size, I agree. But it's it's it is amazing, right, JP? Right.
What if we
Sitting
went
in
crazy?
cash is better than losing a trade. Exactly.
Right, because you're gonna earn some interest in SGov or your settlement fund or whatever when you're sitting in cash. So
Yeah.
so what if what if we're entering a trade period and we go crazy and want to do 10 trades? What would our expectancy potentially be?
Well, we could just leave it wide open, and that the expectancy using 2025 data shows 2.52. And bro, some of these are like, look at this, like June 27th. You're not taking all these trades, my friend.
No.
That's 34 trades on June 27th. But let's say we get the top 10 number filters, top 10 items. There we go. Oh, that didn't work like I wanted. Let's do number filter. Less than or equal to 10. That's what we need. Let's say that each chance that there were up to 10, we took all of those. Now, some days there weren't, right? Some days there were 3 or 4. That would give us 4.03. I mean, these numbers are crazy. Remember, here's perspective here. All buy and sell signals in outlier 4.0 comes to 31 basis points, I think, on active signals. Swing signals is like 70 something. With the additional filtering that we put in on the entry side to get to plan A, we were around 1.2. Putting this additional filtering in, taking only trades that historically have shown to work with the outlier buy and sell signals, and not every time, right? There are a decent amount of losers in here, but not every time. But you're taking, up to 10 trades in a single day, an expectancy of 4.03. This is absolutely crazy.
I'm ready for us to put it to work. You
Yeah.
said this is likely to be what Plan A entries are going to result in, right?
Right. Yeah. This is and in fact, this actually has all the exits already built in.
Okay.
Dude, Scott's so smart. Scott coded in hitting order blocks. He coded in gapping craps. He coded in the 10 EMA getting hit. He coded in sell signals. Dude, Scott's a genius.
Wow.
So yeah, this would include all of the exits as well. And when we include up to 10, that's 47 trades for the year. Now, some of you are probably thinking 47 trades on the year, that's nothing. I can't believe this. What a scam. This guy is trying to scam the mess out of me. I hate everything that he's doing. But wait a minute. Isn't this the same guy who in 49 trades last year put up 91.37%? Same dude.
Right. And
And where
you
I'm
told
trying to
us
go with that. Yeah, go ahead.
you told us about another market wizard who had very few trades, was largely in cash throughout the year, and he had, yeah, I don't know if he won the championship, but he was definitely a contender.
And that's the thing is that you don't need a high volume of trades if you have like this where you're hitting it and you get paid bigly when you hit it. It's
Yeah.
really cool. Like this is game changing. The problem here is that most people can't do this, right? What we're trying to do, what we're trying to teach you, what I'm trying to show you is not normal. If you want normal returns, 8% a year, 10% a year, go put it in the SPY. If you want abnormal returns, you're in the right place.
I'm in for abnormal, man. Let's do it.
Yeah. Let's do abnormal. I'm really good with
Yeah.
that. I saw Jeff the El Toro. That's such a fun username. Jeff the El Toro. Jeff the Bull says, hang on, if you do outlier returns over 50, it could be even higher. Hold tight. I love this idea, Jeff. So let's filter. So we're saying up to the top 10 on each day. Outlier return. Right now, what do I have it at? I don't have any filters on these. Does this show I have a filter? Oh, I think it's because I filtered for positives. That's right. Number filter greater than 100. Right. So historically speaking, it's given up 100% returns over time. Minervini won with being in only 40% of the year. Right. 6.43. And that's 24 trades. So higher expectancy than going with the top 4 and roughly the same amount of trades. That sounds good too.
I can do 27
But
trades a year. I think I'm at like 50 right now, so I could fit this in.
yeah, but Joe, most people can't.
Yeah.
That's hard. 47 great probability trades is better than 200 iffy trades. Yeah. Right. And that's the power of the outlier here is that we have all this data. We've been working with all this data. We've been trying to figure out how to take the signals that were already being generated, all the data with the breadth and everything else that are already being generated, and come up with a plan that is most useful, most capital efficient. That's the word, right? For every day you're in the market, how much better are you outperforming the market? Joe, perspective here time. Like perspective time. Golden ticket trading strategy on the 3.0 signals, which I thought was great, which yielded me 91.37% last year.
Yeah,
Expectancy.
let's not say you thought it was great. It was great.
I,
91% return.
I thought it was pretty good. Had 0.08% expectancy. Scott ran the data for me and I couldn't believe it. I was like, no way. He's like, yeah, 0.08 when it came down to it.
Yeah.
This, what we're talking about right now, is showing over 6%. So that's like thousands of percents better.
Yeah. Yeah, exactly. Each trade given 6%. I mean, people wait all year for the S&P to do that some years, you know?
Exactly. And
Mm.
to that point, it's not just 6%. Um, like it is just 6% on the stock. When you add in the options, we're talking, significantly more. So let's run a theory of let's do outlier return greater than zero, greater than zero. And then let's do an outlier rank of the top three. So we're getting the least amount of trades. That gets us to 6.62 on 19 trades. So if our expectancy is 6.62 and we have 19 trades, that means our outcome would be 125% on the stock alone, then not compounded. Hold on, hold on, but it gets even better. Imagine rather than 6.62, you get, let's say somewhere in the neighborhood of like 8 times greater on your options. Okay. Let's say you're in the neighborhood of somewhere like this. In fact, let's just do this. Let's do this. Let's take all of these and then multiply them times 8. This times 8 and down. Mess that up. Let me move this over here. There we go. This approximately could be what options are like, right? Joe, that expectancy is 52.99. And that includes 8 times bigger losses and 8 times bigger wins. 52.99 expectancy on 19 trades.
Wow.
1,006. Bro, this sounds crazy talk. This is how you win the US Investing Championship right here.
Yeah. I think we'll all win. We're all just going to put in the couple $100 and we're all going to win.
And to Ozzy Ian's point, that's not compounded either. That's not compounded at all. So this is really cool.
Yeah.
Yeah, go ahead.
We got a question relating to capital efficiency here. It kind of lines up with what you started us out with.
How many days to hold a trade? That's a brilliant question. I actually have that data. Hold tight. Let me unhide that. If it were up to me, I'd just show you everything. But my hash was like, don't show everything, Chris. I have to actually get in the platform to see this stuff. Okay. Here we go. Days held on average. Some of these are decently long. I'll give you that. Days held on average, 18. No. Average 15.6. 15.6.
So that means you've probably rolled in that time period. And so you probably have free trades or multiple free trades on.
Oh, yeah, for sure.
Yeah.
For sure.
Zero risk.
Now, some of these are long, right? Like tell. Let's look at that one. Let's go to 7.2 in tell. See my chat GPT conversations there. Let's help me with some formulas. Go to tell. That signal. That's not a bad signal.
Yeah. That's a beaut. And
In
so
fact,
again,
it's actually
For our newer subscribers, what you're looking at there is the 10 EMA line never crossed the 20 EMA, so the short-term trend was always going up on that chart.
Oh, yeah. And so this entry date was 7/2. Exit date was, hold tight. Exit date was 8/1. So August 1st. August 1st here. But it did have earnings. So if you wanted to hold through earnings, you definitely could have got more. Realistically, I would not have held through earnings, and I would only have gotten $6 out of the trade, 3.6%. And that's
Mm.
okay. That's just part of my risk tolerance there. Um, but there you go. There's a perfect example.
Yeah. Couple of
Uh,
questions
little
about, go ahead.
Little Van was just talking about it. Lil Even was just asking about that. Does this take into account earnings? Actually, one of the things that Scott built into here was having exit points at earnings. I'm surprised that one snuck through. It did. Uh, but let's say that I got out at, oh, there's a lot of hard coding in here, not just formulas. So that wouldn't help us. But anyway, Joe, I'm super stoked about this, right? This has been, first off, having Scott on staff, having a quant on staff that can help us run this has been the most valuable thing we ever could have done. I'm so grateful for Scott. So everybody in the chat, type Scott. He is worth every moment of hanging out with us. Like Scott has literally made me potentially hundreds of millions, tens of millions, hundreds of millions. Um, it's an unbelievable amount of profitability that Scott has been able to provide all of us. I am so grateful for that. So I would say that for plan A, we're definitely on schedule to release this on Friday. Doesn't mean I'm gonna do anything on Friday. I'm gonna be sitting in cash for a long time. Um, but man, I just, it feels so good that it feels unbelievable. Like, what's this win rate here? There's 18 of these. Oh, we were counting the header, so it's actually 18 trades, not 19 trades. Either way, if we take 5, so 13 out of 18 is a 72% win rate. I actually really like a high percent win rate, Joe. I don't know about you, but it feels really good to have winners.
Yeah, it does, it does. It also feels really good to see in my portfolio manager, how small the losers are too, though.
Well, look at this, right? Like, look at the average loser size is 1.8%. The average winner size is 9.86 on
Nice.
the stock. Doesn't even include the option.
Yeah.
Yeah.
Did you say
It's
1% versus 9%? That's 9 times.
9.8 versus 1.8.
I'll
Yeah.
take it. I'll take anything better than 1 to 4 is good, man. If you're gonna if we're gonna get that high, that's amazing.
I I'm having a hard time believing this. And if you're watching this and you're having a hard time believing it too, I get it. I get it. But it's definitely taken us a long time to get to this point. If I just if, if I break all the filters and say, give me just the average raw score, it's 1.2. It took us a long time to get us to 1.2. Now, all I've done to go from 1.2 to more is taking the outlier signal return. Granted, I have 140 instances, not 4,000 plus. So positive returns only, just positive returns only gets us to 2.5. Just positive returns only gets us to 2.5. And if we take only the top 3 on each day, that gets us to this number of 6.62.
Wow.
So yeah,
Incredible.
I'm a very happy boy.
Yeah.
I know, right? Other than that, Robinhood's up. Robinhood's up bigly.
Yeah. Let's have a look. But first, you mentioned a minute ago that you anticipate, even though the plan will be announced Friday, that you're still gonna be sitting in cash. Could you give us a
Oh,
little
yeah.
insight into, why we'd still be in cash?
Oh, for sure. Check this out. So one thing that Scott found was, um, If you are at any point in time holding on to any stock when the market's fear and greed is going down, when the SPY fear and greed is going down, you are setting yourself up for very negative expectancy. Very negative expectancy. Meaning, yeah, not bad for 82 cents a day. Thank you, Ian. Um, so if at any point in time you find yourself and the market is trending down on fear and greed, no bueno. No bueno. Joe, let me ask you. How's your trades been since August 7th when the fear and greed's been trending down? Not that great.
I'm just trying to keep the losers small. I've been in cash for, geez, I think like 3 weeks now.
It is fun to open your account and see, I'm just getting paid every day to hang out, not do
That's
anything.
right. That's
Yeah.
right.
I don't mind
That's
that.
enough, baby.
Yeah. And so to that point, that's why I'm saying it may be officially announced on Friday, but it doesn't mean I'm gonna do anything, right?
Yeah.
So that's where I really want you guys to focus in on is that like we're taking the highest quality trades, the highest quality trades. And in this case, 1, 2, 3, 4, 5, 6 total days, 6 total days in 2025 would have given you unbelievable results. Now, you're going to have to set that FOMO aside, and it's going to be hard. It's going to be so hard. You're going to be really itching and scratching and saying, but I'm a trader. I have to do something. Put it in SGov, put it in some other sort of cash bearing account with no market risk, and just relax. Go touch some
Mhm.
grass. Okay. And will there be people, Joe, who are posting their big wins on social media? Yeah,
Oh, yeah.
it's gonna happen. And to Ian's point, it is the hardest, right? But just turn off the noise and focus in on your own trading plan. Now, here's the deal. This is my trading plan, Joe. Nobody else has to follow it. Nobody else has to follow it. In fact, I would say don't even think about following it. That's what I would say. I'm just a random guy on the internet. Don't listen to anything that I say.
Yeah, we should all work on our own plans for sure. Something that fits our lifestyles. Like some of us might need to be working during the day anyway, and we can't place our trades. And we can post them, but we can't do it during after active trading, for instance.
That's right. I would not encourage you to smoke some grass unless that's part of your trading plan. But to Mike's point, what about position sizing? So, position sizing. Deep Thought has been working on our position sizing formulas, and I really appreciate him for doing that. Position sizing, I told him, I was like, my goal here is to not take any additional risk. So, Deep Thought was really clever, and he's backing into our risk percentage. Instead of building up to it, he's backing into it, which I was like, okay, that's pretty brilliant. Um, I don't know if have that a bit. I don't have it available yet because I want to make some changes to it. But it's basically going to be pretty much what you've been. It's going to be similar to what you've been using for a long time. However, couple notes with the 10 EMA being our stop out point. There are times where price is close to the 10 EMA, right? Let's say you took a signal right here and it's I don't know a few cents away from the 10 EMA, and then there's times where you take a signal right here and it's really far away from the 10 EMA. Um, my goal here with the position sizing is to have the same amount of risk, meaning it has at least half of an ATR always. So even if it's right next to the 10 EMA, it's always going to be limited to half an ATR in the position sizing formula. If it's far away from the 10 EMA, which is our stop out point, then we'll be position sizing down appropriately, right? Um, and it will definitely change the sizing. I'm not going to sugarcoat it, right? There will be times where I probably will be taking a trade 3, 4, 5 times as big, but because it's so far away from my trailing stop, I have to pull back, which is part of it.
And now, when your price is very far away from the 10 EMA, the reason you're sizing down is because you're concerned that there'll be a snapback, correct?
Well, not necessarily concerned that be a snapback, but if this is the distance between me and my stop out point, and it gets closer per day, right? It gets closer and closer. Then I need to size down significantly versus if my stop out point started right here. You know what I mean?
Hmm.
Like let's use the math on here. if I took this and I'm $10.66 away versus taking a trade right here where I am $4.45 away, I would have to size down by about half, right? Because my exit point is twice as far.
Mm,
So I'd be taking twice as much risk if I didn't.
gotcha. Okay.
Yeah. Skinny Buff guys got it. The stop will be whichever is the greater risk, the 10 EMA or the half ATR. It's always going to be following the 10 EMA, but for position sizing, it'll be whichever has the greater risk, the 10 EMA or half ATR. Yes. Oh, Salty Brad. Could the size be linked to the 5 EMA? For sure. If that fits your trading plan, Salty Brad, by all means. I think that's a great idea. Joe, these behind the curtains, the invitation only live streams are so much more chill. Plus, I've been sitting in cash and working on a trading plan, and I love showcasing these trading plan changes with you guys. Uh, and it's been a lot of fun to see how it's evolved, right? But of course, as we go through this, right, you need to be working on your own plan. I will give you all the pointers and tips in the world, but my plan may not work for you at all, and that's just part of the game. It really is just part of the game. My plan may be way too boring and way too profitable for you. You want some more excitement, and you want to take even more risk because, by God, you got to risk it to make it, right? Risk it for the biscuit. But I would say the opposite, right? Keep your risk in check. Cut your winners short and let your I'm sorry, cut your losers short and let your winners run out of control. That's the real way to play the game. And you don't need a buttload of trades if you have the right setup. So Joe, if somebody were interested in saving time, making money, and start winning with less risk, what would they do?
Well, they could do something simple. They could just click one of these two videos here.
Wait, which two videos?
One of these ones right here.
The one that's popping up on the screen right now?
Yeah.